Hey everyone, welcome back to Gold Rush Reporter, your trusted source for real-time updates and honest analysis on gold and silver. I'm your silver analyst, and today we've got a really interesting story that's shaking the entire precious metals market. The latest stimulus check announcement is hitting hard and silver prices are reacting fast. But here's the real question. How much do we actually pay for this kind of success? Where does all that free money come from? And why is it suddenly pushing silver back toward record highs? Before we dig in, make sure you're subscribed so you never miss a major move in metals. I cover every spike, dip, and government blunder that affects your wealth. So hit that subscribe button and tap the bell icon so you don't get left behind when silver moves again. The US government just announced a new $2,000 per person stimulus plan. And the market's already reacting. Silver and gold prices have jumped sharply because investors understand something basic. When the government prints this kind of money, inflation follows. And when inflation hits, people run toward real assets, metals that can't be printed, like silver and gold. Let's put it in perspective. A family of 6 could get around $12,000 from this package. That sounds great in the short term. Free money always does. But the long-term impact is brutal. That money doesn't appear out of thin air. It adds to a national debt that's already over $38 trillion. And every extra dollar in circulation weakens the value of the existing ones. That's why people are moving their cash into physical metals fast. Silver, especially. Most people thought silver had already peaked when it broke out of the mid-$40 range. Some even expected it to fall further. But that discount phase is over. Silver bounced off that bottom, and those who hesitated missed the easiest opportunity of the year. That's how it always goes. By the time most realize what's happening, the market's already moved right now. Silver's pushing back above $50, and that's just the beginning. The fundamentals are all lined up. Inflation is heating up, the dollar's weakening, and the Fed's hinting at interest rate cuts. That combination is rocket fuel for metals. Lower rates mean lower opportunity cost for holding silver, and a weaker dollar means every ounce you hold becomes more valuable in dollar terms. Add on the industrial demand from solar, EVs, and electronics, and you've got a perfect setup for a long-term rally. The reaction we're seeing in the silver market isn't random. It's exactly what happens when governments try to fix deep economic problems with more printed money. Think about it. Every new round of stimulus might look like relief, but it's really a short-term sugar rush for an economy that's already addicted to easy cash. When trillions of dollars are added to circulation, without any real productivity behind them, the value of each dollar naturally falls. That's inflation in its simplest form, and history shows us it always ends the same way. Paper money loses purchasing power, while hard assets like gold and silver hold or gain value. This new $2,000 per person stimulus plan sounds generous, but let's do some math. For a country with 330 million people, even if half qualify, that's hundreds of billions of dollars being created out of nowhere. It doesn't come from production, trade, or real growth. It comes from debt. The national debt is already near $38 trillion, which means future generations are basically paying for today's short-term political wins. The government's approach is like trying to put out a fire with gasoline. It might look like it's helping for a second, but the long-term damage is unavoidable. That's why silver is spiking. Investors see what's coming long before the average citizen does. When they hear stimulus, they don't think free money. They think currency dilution. Each check the government sends out is another reason to hold physical metals instead of cash. The same thing happened after the 2008 crash and during COVID. Massive stimulus packages drove metal prices up because people knew fiat money was losing credibility. Silver is simply repeating the same pattern, and the next few months could be even more aggressive. Now, some people argue that this won't last, that silver will fall again once the excitement fades. But that logic ignores the deeper trend. The dollar's value keeps sliding, interest rates are likely to be cut again, and inflation hasn't actually gone down as much as official numbers claim. The Fed can't raise rates without crashing the economy, so their only real option is to print more and hope nobody notices how bad the damage already is. Meanwhile, silver's industrial demand continues to grow. From solar panels to electric vehicles, the world needs more silver than it can currently mine. When you combine that real-world demand with financial fear, you get explosive upward pressure on prices. Even people who never cared about metals before are starting to pay attention. They're realizing that every time they get a stimulus check, their grocery bill quietly goes up, rent climbs, and savings lose value. So instead of keeping cash, they're converting it into something tangible. Silver gives them control, something the dollar no longer offers. So the real story here isn't just about a one-time stimulus. It's about trust. Trust in the currency, in leadership, and in the system itself. And once that trust breaks, it doesn't come back easily. In the next part, we'll talk about how the global picture, debt, war tensions, and the weakening US dollar is accelerating silver's rise, and why some analysts believe we're entering a new era for precious metals altogether. The global backdrop is what's really fueling silver's surge right now. It's not just about stimulus checks or US inflation anymore. It's about worldwide instability and the collapse of confidence in fiat systems altogether. Everywhere you look, there's tension. From Russia and Iran to Venezuela, Palestine, and Nigeria, global conflicts are shaking investor confidence. Add to that the constant political uncertainty at home, and you get a perfect storm that pushes people towards safe haven assets. Silver is benefiting massively from that fear. Whenever uncertainty spikes, metals shine, because they're one of the few assets that can't be manipulated or printed out of thin air. At the same time, the US dollar is under serious pressure. The Federal Reserve is hinting at more rate cuts, and that's crushing the dollar's strength. Remember, silver and the dollar move in opposite directions. When the dollar drops, silver climbs. That's exactly what we're seeing right now. The market's losing faith in the dollar's ability to hold its value, especially as the government keeps spending and borrowing without restraint. Every trillion added to the debt makes the dollar less attractive, and that weakness acts like rocket fuel for metals. But there's more to it than fear and currency weakness. The industrial side of silver is exploding. Demand from solar panels, electric vehicles, and tech industries is rising fast. Silver isn't just a monetary metal anymore. It's an essential industrial commodity. The problem? Supply is tight. Mining output hasn't caught up with the growing demand. Major mines are reporting lower grades, and new projects are taking years to develop. That imbalance between demand and supply is exactly why silver's price can move so violently. When you add panic buying from investors on top of industrial demand, you get a short squeeze that pushes prices into uncharted territory. Now, a lot of people are asking if $50 was the ceiling. Honestly, it's not. We've already touched $51 and briefly hit $54, and that's not a random spike. It's a signal. When you break major resistance levels like that, the next move is usually bigger and faster. Sure, there'll be pullbacks, nothing moves straight up, but the long-term trend is unmistakable. The fundamentals support higher prices, not lower ones. The ones who sold early will probably regret it. Those who hold their positions are betting on what's coming next. A structural shift where silver starts behaving more like a global store of value than just a commodity. Some people are cashing out now, and I get it. If someone's been stacking for years and wants to pay off a mortgage or buy something meaningful, that's fair. But long-term holders understand that we're still in the early stages of a major transformation. The dollar is weakening, Inflation is far from over, and governments around the world are running out of tools to fix it. Silver is becoming the alternative for people who no longer trust the promises of central banks. The deeper you look, the clearer it becomes that silver's rally isn't a short-term reaction. It's part of a much bigger shift in how wealth and value are being measured. The US dollar has already lost over 98% of its purchasing power since the Federal Reserve was created. Every generation gets fooled into thinking this time is different, but the pattern never changes. Fiat currencies always collapse under the weight of their own debt, and precious metals always end up reclaiming their role as real money. Silver is simply reminding the world of that truth again. When you compare silver to the dollar index, you can see the inverse relationship playing out in real time. As the dollar weakens, silver strengthens. Investors don't trust central banks anymore. They see the endless cycle, rate cuts, debt expansion, and stimulus packages, and they know it's not sustainable. The government's only weapon left is to print more, which temporarily keeps markets calm but destroys long-term stability. The more dollars they create, the more people turn to tangible assets that can't be debased. That's why silver is outperforming expectations and refusing to give up its gains. Add in the industrial side, and it gets even more compelling. The demand from electric vehicles, solar energy, and technology sectors is exploding. Silver isn't just an inflation hedge anymore. It's becoming a vital resource for the future economy. And here's the kicker. There's not enough of it. Global inventories are shrinking. The London bullion market is reporting record withdrawals. Refineries and vaults are being emptied faster than they can be replenished. You can print another $1 trillion in stimulus overnight, but you can't create new silver deposits that easily. That's why long-term investors are holding tight. They know scarcity is where the real profit lies. What we're seeing now is a psychological shift too. More people are starting to understand that wealth isn't about the number in your bank account. It's about what that number can buy. If your money loses value faster than you can earn it, you're not saving. You're sinking. Silver protects you from that decay. That's why physical demand has surged among regular people, not just institutions. Families who never owned an ounce before are buying silver coins, bars, and ETFs. They're realizing that owning something real is no longer optional, it's necessary. Even with all this momentum, the media will still downplay it. They'll call it a temporary spike or a speculative bubble because they need people to keep believing in paper wealth. But look at the data. A falling dollar, a growing deficit, rising industrial demand, shrinking supply, and record global tensions. None of that screams temporary. This is the early stage of a long-term evaluation of what silver is worth in real terms. So, if you're watching the charts right now, remember the bigger picture. Silver's moves aren't just about traders and short-term profits. They're about an entire financial system running out of credibility. As more people lose faith in fiat, silver becomes the reset button. In part 5, we'll wrap it all up and talk about what to expect next, the key levels to watch, the long-term targets analysts are projecting, and what smart investors should be doing right now before the next leg of this rally begins. So here we are at the final piece of the puzzle. Silver isn't just moving because of today's headlines. It's moving because the fundamentals are screaming it's undervalued. Weakening dollars, ongoing stimulus packages, growing global instability, and industrial demand are all combining to push prices higher. We're seeing record withdrawals from bullion vaults, supply constraints that aren't going away anytime soon, and more people turning to physical silver as a safe store of wealth. The trend is clear. Silver is no longer a speculative play. It's becoming a core asset for anyone serious about protecting their wealth in the years ahead. Now, where do we go from here? Analysts are watching key resistance levels like $54 and beyond, and while short-term pullbacks are normal, the long-term trajectory is unmistakable. Expect volatility, it's part of the game, but don't lose sight of the structural forces behind these moves. Those who understand the bigger picture, the relationship between dollars, debt, and silver supply, are the ones positioned to benefit the most. For those of you stacking silver, now is the time to evaluate your positions carefully. Some may choose to take partial profits, while others will continue to hold, betting on the structural trends that have been building for years. Either way, knowledge and timing are your most important tools. Keep watching the markets, understand the global drivers, and make informed decisions, rather than reacting to short-term noise. Thank you so much for joining me today on Gold Rush Reporter. I really appreciate every one of you tuning in, subscribing, and engaging with these updates. If you haven't yet, hit that subscribe button, tap the bell, and stay connected, so you never miss a critical silver or gold move. And don't forget about our silver giveaway. Subscribe and enter for a chance to get some physical silver delivered right to your door. Good luck to the luckiest stacker out there. As always, I'll keep bringing you straightforward, analyst-level insights on precious metals, economic trends, and how global events are shaping the future of silver and gold. This is Gold Rush Reporter, keeping you informed so you can make smarter decisions in an unpredictable market. Stay sharp, keep stacking, and I'll see you in the next update.